Hello and welcome to the look ahead for Friday, the 8th of November with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow is quite a bit quieter than recent days. We've got Bank of England's Hugh Pill speaking, Canadian jobs data and US Michigan consumer sentiment. Finally, the Baker Hughes weekly rig count will also be released. So, the focus this week has been massively on the US with the US elections. We've got the Federal Reserve interest rate decision, which is due shortly. Then tomorrow, the data, as I said, is much quieter. We've got University of Michigan confidence, which is expected to tick higher. So that goes hand in hand with this view that we've been seeing recently from the US of stronger data, resilient data, surprises to the upside. Obviously, we're seeing the strength in the US economy or resilience in the US economy, which could mean that the Federal Reserve will need to be cutting interest rates more gradually next year. Obviously, Trump has been elected. We've seen that he's expected to implement expansive inflationary policies. However, there are a few questions surrounding whether the trade tariffs that he's looking to implement will also mean that we could see global growth and US growth included come under pressure. But this is the Nasdaq that we're looking at, trading at fresh all-time highs. So it's bounced higher from that low that we saw at the beginning of the month, and that was just above the 50 SMA. This level here, just above 20,000, just below 20,000, rebounded higher, taking out that rising trend line support, and we've pushed above the previous all-time high of 20,750, up over 21,000, looking pretty strong. We're not in overbought territory, so as long as we have some encouraging comments from the Federal Reserve this evening, then we could see that rally continue into Friday. Just be interesting to see whether we see a profit taking place ahead of the weekend, given the strong week that we've had for equities. The other one we're just going to take a quick look at here is sterling US dollar. We had the Bank of England monetary policy meeting today. We've got Chief Economist Hugh Pill speaking tomorrow. And it's basically, we've seen the pound rally despite the Bank of England cutting interest rates by 25 basis points because of a warning over inflation. As far as the Bank of England is concerned, they see Labour's government budget to be inflationary. In fact, they see it increasing inflation by 0.5% at its peak next year. So that means that they may be looking to cut interest rates much more gradually as well, which has helped lift the pound, particularly against the dollar strength we saw yesterday. But obviously dollar weakness today is also helping the pound get back towards that 130 trade level. That 130 level is pretty key. If we can get above there and the 130.50, which is the November high, then that's going to create a higher high. And we can look towards the 131 level and then up to 132. On the downside, this level is the 128.50. It's a level that basically caught support for cable in October and in November. So that's just above the 200 SMA, so one to be watching for as well. Just finally, let's also take a look at oil. So oil's had some pretty jumpy moves recently. Obviously, there's quite a lot going on here. So we've sort of got the market weighing up what the US presidential election and trying to decide, is that good news for oil or bad news? Basically, you've got the strong US dollar yesterday, which dented oil prices. Obviously, our stronger dollar makes it more expensive for buyers of foreign currencies. But then you've also got this idea of, he's expected to try and help boost growth in the US. His policies are expected to be, or hope to be, expansionary, but pro-business at least, which could help oil demand increase. But at the same time, there's those concerns over what might happen to China with trade tariffs. China's growth is already fragile. We saw lower imports of oil from China in data released today. So that does raise some questions about the outlook there. the same time, we might see more sanctions reapplied to Iran and Venezuela, which would help supply, or it helps supply, reduce supply, boosting the price. So there are a lot of factors in play. Obviously, OPEC pushed back their plans to increase oil supply to next month. I think that's going to potentially remain in question, depending how the oil market is when they look to do it in January. Pushed back from December. Just as far as the chart is concerned, we've talked about this level for so long now, the 72.50, 71.50 band of resistance. That's where we're back in again at the moment. We're just coming out below it. It's very, very oil price pretty much unchanged on the day. But we need to get a move above the 72.50 really to start pushing towards that 75 level around number in the 100 SMA. Failure to arrive above this resistance zone could see oil prices come back towards 70 round number and then towards the 67.50 level that we've talked about on several occasions on the downside. Now, I hope you like what you've seen, and if you do, then please do give this video a like. And if you would like to see more videos like this, then please do subscribe.